Welcome to the Selftax YouTube channel. If you're an expat, business owner, or landlord, this channel is for you. We simplify tax rules, deadlines, and updates so you can stay compliant without the stress. Subscribe and stay informed. MTD for income tax is now live for landlords with income above £50,000, and the mistakes people are already making are very specific and very avoidable. In this video I am going to show you the most common MTD mistakes landlords are making right now, why they happen, and exactly what to do instead so your compliance is clean from the start. The most common mistake landlords make before they even start is checking the wrong figure to decide whether MTD applies to them. The MTD threshold is based on gross income, meaning your total rental income before any expenses are deducted. Not profit. Gross income. So if your rental income is £55,000 but your mortgage interest, repairs, and agent fees bring your profit down to £28,000, MTD still applies to you from April 2026. The threshold is crossed at the income level, not the profit level. If you own a property jointly, your qualifying income for MTD purposes is based on your share only. So if a property generates £80,000 gross rent and you own 50%, your share is £40,000. On its own that keeps you below the 2026 threshold. However, if you also have self-employment income or income from other properties, those figures are combined with your property share. HMRC aggregates all qualifying income across UK property and self-employment per individual. Joint ownership reduces the figure but does not automatically take you out of scope. A lot of landlords with multiple properties assume they need to file a separate quarterly update for each property. That is not how it works. Under MTD for income tax, all your UK property income is treated as a single combined property business. You submit one set of quarterly updates covering all your UK rental properties together, not one per property. Where separate reporting is required is if you also have self-employment income. That is a separate income stream requiring its own quarterly updates alongside your property updates. This misunderstanding causes genuine anxiety for landlords. Quarterly updates are not tax payments. Submitting your quarterly update does not trigger a tax bill or require any money to leave your account. A quarterly update is a summary of your income and expenses for that 3-month period, sent to HMRC through your software. Your tax payment dates remain exactly as they were under self-assessment. Payments on account on the 31st of January and the 31st of July, and any balancing payment on the 31st of January following the end of the tax year. One specific record-keeping mistake that catches landlords out is lumping mortgage interest together with other expenses. HMRC requires that residential property finance costs, including mortgage interest, are always categorized separately in your digital records. This is not optional. Even if you qualify to use simplified 3-line accounts, which record just income and expenses without full categorization, mortgage interest must still be broken out as its own entry. Getting this wrong in your digital records creates an error that flows through into your quarterly update figures. Your first quarterly update for the 2026 to 2027 tax year covered the 6th of April to the 5th of July, 2026 and was due by the 7th of August, 2026. That means the window to set up software, connect your bank feed, and get your records in order before the first deadline was extremely short. Landlords who left software selection until April or later faced learning a new system while also trying to capture 3 months of records simultaneously. The lesson going forward is clear. If you are entering MTD in April 2027 at the £30,000 threshold, start your software setup now, not in March 2027. Under self-assessment, many landlords used HMRC's own online filing service to submit their tax return. Under MTD, that route is no longer available for MTD users. Once you are mandated into MTD, your final declaration must be submitted through your MTD-compatible software. HMRC's online filing service is closed to you for this purpose. This means your software must be capable of filing the final declaration, not just the quarterly updates. Before committing to any software, confirming that it covers the full MTD process including the final declaration is an essential check. If your rental income is currently below £50,000, MTD does not apply to you yet. But the threshold drops to £30,000 from April 2027 and to £20,000 from April 2028. The mistake here is waiting until the month before your mandation date to start preparing. Choosing software, building a digital record-keeping habit, and understanding the quarterly process all take time. Starting that preparation a full tax year before your mandation date means your first mandatory year is straightforward rather than rushed. So what are the MTD mistakes landlords are making in 2026? Checking profit instead of gross income against the threshold. Assuming joint ownership removes the obligation without checking the combined qualifying income. Filing separate updates per property when all UK properties are one combined stream. Confusing quarterly updates with tax payments. Not separating mortgage interest as its own category. Leaving software set up too late. Not checking the software covers the final declaration. And assuming below threshold means no preparation needed. Understanding these issues early can help make your first year of MTD much smoother. Next up, what allowable expenses landlords can claim under MTD in 2026. Thanks for watching. Subscribe to Selftax for clear practical UK tax guidance. Stay informed, stay compliant, and stay one step ahead of HMRC.